Whenever price offers that to you and it's an immediate rebalance and we've already met an objective. What's the objective? The weekly gap I told you. Were we able to make higher highs after that? No, just hugged around right above that 13,480.75 level on multiple hours between the 8 p.m. on Thursday all the way to the 9 a.m. For 12 hours, it just stayed around inside that gap, but just wanting no real interest above the high that was formed at 9 p.m. on Thursday, which came in at 13,494.25. So that immediate rebalance is a signature that tells smart money that the algorithm will start spooling price. That means it starts sending it. Boom. Where's it going? Down. Where's it going to seek? Inefficiencies. Okay, well, let's put your candle. I'm sorry, put your cursor right on the 10 a.m. candle on NQM 2023. That high reprices back to a specific price level, the weekly gap low. We've already filled it. We have balanced it. What does that mean? We went up through it. We passed down through it. And then we went up, tried to test it as going through it one more time. And we failed immediately with a immediate rebalance. So that's the reason why I coined it immediate rebalance. When it rebalances like that, you don't need, the range is too short in time. You only have those three candles. The candle formed at 10 a.m., at 9 a.m., and 8 a.m. And 8 a.m.'s low, it rebooks to and allows the price to be offered 1 point above that. That's allowing for smart money to get short there. It does not, and it will not go back to the high of 13,480.75. And I know when you hear that, it sounds like, oh, he can say that now because it's hindsight. Look at my trades, folks. Look exactly at every single time I place a trade and where I'm placing my stop loss. You don't see that in retail books. You have no idea why I'm doing those stop placements unless you have trained with me. I know that the algorithm won't go back to those levels. And if it does, say I'm wrong, I'm human. Say I'm wrong, I get that wrong. Then I know that I'm going to sit sideways and do nothing for that session or look to reverse. I'll teach you that this year. But there's things that you have to learn incrementally. You can't just say, okay, I'm going to have a conversation with ICT. He's going to tell me everything he needs to tell me in a couple videos. Boom, boom, boom. And I'm going to know everything I need to know. And I'll never have any questions about this or that. No, you're going to have all kinds of questions. You're going to have a lot of questions when I'm done in November that pertain to you personally, but not how you're going to trade. You're going to have a plethora of ideas that you can go in and find setups. And this is one of them. This is a model that in and of itself can absolutely do everything you need for trading and not have to do anything else. Don't you always say that, ICT? Yes, that's what I'm talking about. I have lots of models. I could create a new model every single day, and they would be independent of one another, and they are offered every single week. See, that's the problem with all of you that are coming in here that you're feeling rushed. I need to learn this right now. I got to get funded. I got to do this. I got to do that, blah, blah, blah. No, you got to settle down, man. You just settle down. You have to allow yourself to grow an affinity for one thing that I've taught or will teach. And then once you know what that is, then you pour all your attention and your focus into that. Be a master of one thing. Don't try to be a master of everything. It took me three decades to know what I know, to be able to do what I can do. You're not going to learn it just because I can do it. I'm not going to be able to teach it to you real fast and short. And the 5-minute trainer guys out there on YouTube, they're trying to condense my stuff. They're not going to help you either. They're not. And I get it. They want money. They want clicks. They want, the attention or whatever. But that's not going to help you. You have to find something that resonates with you. In this immediate rebalance, it can be a model, or for me, most of the time, it's just a confirmation that, okay, I'm about ready to see what? Strong down move. I want to see large range candles. I saw a person send a tweet to me. How did you know, ICT, when the market's going to have these big sudden rushes and big candles? How do you always do that in the reviews, your videos, or reviewing things and you're showing your executions? You type it out and you know exactly when it's going to happen. It's things like this. This signature here. I have about a dozen of these types of specific things I'm looking for that tell me right when speed and magnitude should enter the marketplace and start to take right off. When I'm looking for something, right away it should take off. Right at that candle or the very next one. That is anticipation. That's not reacting to price. So you need to know what you're looking for. Why should it form? Where will it form? And where is it going? If you placed your cursor on that 10 a.m. candle, you can see that the high went right up to the low of that gap that if you would have never placed it on your chart, it would completely be hidden from you. Notice that. You have the lines on your chart because I told you about it. Everyone outside of our circle has no idea that that thing even exists or that's even worth having any mention of. And they're surprised at how price reacted on that on Thursday and the Friday. They have no idea why it did what it did. But let's go over a couple things. What did price do all week in NQ? Go higher. Where did price originate that long price swing higher? Inside that daily fair value gap, as I mentioned, I was interested in that and seeking the premium. So I gave you what? The discount to premium. I gave you the bias. I told you what market I was favoring. I wanted to be in NQ. What market should you be focusing on for longs? NQ. So go back and do your back testing on that this week, today, or tomorrow. And look at all of the time frames and what you can see, what you can find. And don't be worried about the fact that you're looking at after the fact. Everything is learned in hindsight. Every doctor that ever does a surgery on you or anyone else or your loved ones, they all did back testing. They all did hindsight study. They worked with a cadaver that was not alive when they cut on it. Don't be afraid to work in the sandbox. Don't waste your time doing silly things to rush through that thinking I got to trade with a real account because I won't learn unless I do it with real money. The only thing you're going to learn is that you should have never done it as soon as you did. I promise you, every single one of my students have ever done that have always sent me emails and regret saying, I wish I would have listened to that. That's the most regretful thing I always receive from students is they wish they would have never went to live fund trading as soon as they did. And they went back to square one. And the ones that made it, they understood rushing to that point. That makes this whole process longer for you. Because now you're listening to me stressed out because you either lost money, you're in drawdown, or you've wasted money on trying to get a funded account passed, or you lost your live account, or you're now afraid to take trades. And you can see them after they happen, and you knew they were likely to do it, but you're afraid to push the button. Why? Because you lost money before you learned how to reprice. So now everything is completely skewed. You have no idea what to trust anymore. So that means you have to take some time away from the marketplace. What does that mean? 2 weeks. If you're all messed up, you're confused, you don't know what to do, take 2 weeks. No markets, no ICT, no videos, nothing. No social media, completely devoid of all market action. Nothing. And unplug. And then come back, start at square one again. Don't think you know everything. Don't assume, oh, I watched this video before. I did this before. I did this exercise. I did this back testing stuff before. Go through it all over again. And forgive yourself for making the mistakes that you did. Because everybody that succeeds forgives themselves for doing all the silly stuff they did. I didn't find myself until I forgave myself for all the silliness, trying to make something happen with such an infant mindset about understanding what I think price is going to do because of some indicator. So I got rid of all that stuff. And when you start seeing signatures like this immediate rebalance, it repeats. It's indicating that it doesn't want to leave a fair value gap. Why? Because it ain't gonna be wanting to come back to it later on. Not in the immediate future. See, my fair value gap is a deferred repricing. It's a deferment to a later in time. It will come back to that. So that's the reason why I teach you to take scaled profits. When you listen to these goobers out there, they don't do any executions. They don't tell you what they're doing. They don't show you what they're doing. They haven't called anything. They're not doing anything. But they got an armchair opinion about everybody else, not just me, but everybody else out there. Everybody else is a scammer. Everybody out there is doing this and doing that. But the people that are really doing it, like me, I'm calling out, telling you, and teaching and showing people with making real money. This stuff's repeating. It's like clockwork, Swiss precision. And they're going to tell you partials are stupid. It's dumb. You took this much risk when you put the trade on first, and then you took something off. That makes no sense. Okay. Making money doesn't make sense to you then, apparently. If you are entering on a fair value gap, okay, if you're entering on a fair value gap, you will be better served as a developing student to take partials when the price is giving it to you. If, okay, here's one of those unicorn moments where you should be writing this stuff down. If you get an immediate rebalance where price does something that would otherwise, in normal instances, this should have created a lower high on the candle at 10 a.m. on your NQM 2023 NASDAQ hourly chart, Friday, May 12th at 10 a.m. New York local time. That high of that candle, and in any other instance, if we didn't trade back to that weekly gap low there, that would have formed a fair value gap at the 9 a.m. hourly candle. Absolutely would have done that. I would have anticipated that. And then I would have anticipated a run right back up into that as long as the low at 10 a.m. on Thursday hadn't been traded through. Because right below that is sell side. Now, from that low all the way up to the high formed at 9 p.m. on Thursday, there is no fair value gap in that price swing. There is no inefficiency. It's back and forth, but still going higher. So what is going to be the draw from that immediate rebalance at 10 a.m. on Friday? The sell side liquidity and what? The open portion of the 2 p.m. Wednesday hourly buy side and balance, sell side inefficient, that big green candle or big candle, up close candle at 2 p.m. on Wednesday, May 10th, 2023. So these are two targets. And best case scenario would be what? Returning back to what? New week opening gap. It's a magnet, folks. That's where fair value exists for the week. The weekly range, the weekly candle has a built-in fair value gap. That is my new week opening gap. That's the reason why I teach it to you the way I teach it. Everybody else that sees that gap, if they watch it or if they see it like that, oh, it filled the gap. They're done. They're done. There's never been a writer. There's never been an author. There's never been an educator. There's never been a trainer. There's never been anybody else out there ever that ever talked about this logic but me. And I say these friggin' things because I'm tired of little boys on YouTube crowing about how, yeah, this guy's supposed to have concept and he has this and he has that. Motherfucker, I'm calling this shit like to the tick. You're out there trying to get fucking funded accounts. Can't get fucking payouts. Can't do shit. Stop talking about me, motherfucker. Mind your own fucking business. You can't keep up with me. Okay, I'm being fucking nice to all you motherfuckers. I'm allowing you to have an audience. Immediate rebalance. You do not take fucking partials. You don't. You don't take partials on immediate rebalance because it's going to have a different type of delivery. It's going to be sudden. It's going to be one-sided. Boom. Avalanche. Blast off. Straight up vertical or straight down. In this case, that gap that we had on the weekly chart for NQ I talked about, it's repricing. It's going right up into that low and repricing to the low at 8 a.m. It's not allowing a fair value gap to form on the 9 o'clock candle. So once it reprices immediately right to that, we already know that Thursday and Friday, if we've been seeing prices going higher for the entirety of the week, which is what we saw in NQ, it hit our objective. What was the objective we're looking for? That gap closure on the weekly chart between 13,480.75 and 13,453 even. So it's already worked that level. It's filled it in. It's balanced it because it's offered upside delivery. In other words, prices moved from the low of 13,453 up to 13,480.75. It has done so in up close candles and down close candles. So because it's offered two-sided delivery, that range that was in inefficiency at one time, before I mentioned it, we were looking at a chart that had an actual gap there. There was no buying and selling between those two price points. It was devoid of any trading, which makes it, by definition, a real liquidity void. It is not the candle that is formed at 10 p.m. on Wednesday, May 10th. That is not a fucking liquidity void. Okay, that's not a liquidity void. That's a buy side imbalance, sell side inefficiency. Liquidity was offered there. Void is, when you say liquidity void, what is the subject matter? Liquidity. What about it? What's the story? Tell me about it. What's the big deal about it? It's void of any liquidity. No buying or selling took place. A buy side imbalance, sell side inefficiency. That means it's one-sided offered, that candle at 2 p.m., May 10th on your alley chart for NQ. Buy side was offered predominantly. In comparison, what was inefficient? It didn't allow price to go back down to the previous high on 1 p.m. May 10th on your hourly chart for NQ. Until we got to Friday at noon. And then it trades down into what? Current new week opening gap. Oh, this guy, he's full of shit, man. He's making it up as he goes along. How many times have you seen my new week opening gap get respected throughout the entirety of the week, create very specific highs and lows, and we see it again here? Now, we're not supply and demand. We cut through candles going all the way back to Sunday. Price has gone up, down, through it, all around it. It runs quickly off that immediate rebalance. So what does that mean? What does that mean for you as a trader? Well, you don't want to be taking partials in between the range of 13,453 or 440 in that vicinity. That's where you could have been going short, anywhere in that 10 to 13 handle range. You could be getting short there off of that immediate rebalance. Had I been in front of the charts on Friday and not driving, I absolutely would have been selling short there at the touch of that 13,453 even. I would have been all over it, hammering it. And if it went above it a little bit more and touched the low of the 8 a.m. candle on Friday, May 12th, I would have added more. And I would have taken no partials until we drew back down into new week opening gap. I need not have gotten that low, but I would have aimed for one tick above the high, which is 13,316.25 for me. And that would have filled. And I would have been peacocking around saying, haha, here's another trade. And I didn't get the very low, which is the new week opening gap low, but it would have been another trade I would show. I would have been like, need a dose? Here it is. But no partials would have been taken. None. And how many hours did it take to move from that immediate rebalance at 10 a.m. down to the new week opening gap? 3 hours. It hits the high of the new week opening gap at 1 p.m. And then at 2 o'clock, it makes the low of the day and trades very precisely. Not one tick off. The low is the 13,310.50 level. You see it? Hover over top your 2 p.m. May 12th, 2023 on Friday. At 2 p.m. in New York local time, that candle's low is 13,310.50. That is the absolute low of the new week opening gap. Had you never been taught this, that low would have been completely a surprise to you. And for 3 fucking decades, I have watched this stuff happen every single week that goes by. It's happening all the time, and it's never going to change. It's never going to stop working. It's never going to be reprogrammed. It's never going to be changed. It's never going to be made obsolete. So stop fucking worrying about it. Use it. If it would have been tainted by me teaching it, my flesh would have kept me from teaching it. I'm promising you that. I'm promising you that I would have never shared that. If I believed in my heart, it would change. Greed, selfishness would have kept it. Can you just respect the fact that I'm being that honest with you? You keep asking me these things. Stop. If I'm teaching it, it's going to keep fucking working. There you go. The stuff that I won't teach, It's not for the public. It's too good. And you probably look at this saying, what the hell? Yeah, next level shit. Next level shit. But you don't need that. Look what I'm teaching you here. Look what I've already taught. Look at the fucking money these people are making around the world. They're all doing the same shit now.